we made a decision 2 years ago to take our outsourcing efforts and bring them in-house and go captive. And we took 65 associates that were working for our outsource provider, formed our own entity, and made them market employees. And we did that from, and I think it ties in well with the financial and investment strategy concepts, we did that from a concept of wanting to obviously own and control our intellectual property a little bit more. We wanted to control our destiny in India a little bit more, and felt like we'd have more control if we managed the group ourselves. We also wanted to have more flexibility around the financial decisions we'd be able to make to capture more of the efficiencies. We also wanted to enter into the Indian marketplace and build a client base to offer our products and services. And so we also wanted to expand our functions to include not just analytics work or basic operations work, but also to do development, testing, and corporate functions like corporate finance and other areas where we could benefit from not just the cost benefits, but also the skill set and what India had to offer in terms of talent. So we've grown from 65 to about 270 associates, and we'll plan to grow up to 400 to 500 over the next 12 to 18 months. And I think from that perspective, I think there's three areas that I look at as challenges, again, that tie into the company, but also tie into the concept of financial strategy, because ultimately everything is tied to your financial strategy and how you're performing relative to what your board and your senior management expects of you. So the first thing is people investment. We've those of you that have been here the last couple of days have heard about the fact that attrition's high. There's going to be a shortage of talent over the next 5 years, even with the growth of the population and the number of graduates coming out. So I think there has to be significant investment financially in making sure that you build out a strong talent pool. And so that's a critical part of a financial strategy to say, we're not interested in short-term, just trying to get, cost benefits at the expense of the long-term strategy. I think the second piece and challenge for us is around how do we go about doing our day-to-day business from a financial standpoint. Do you lease a property? Do you own a property? What are the specifics of having to deal with that? What are the financial impacts of regulations? Because we're in Noida, which is UP, which has a completely different way of doing business and has completely different impact to your financial strategy versus just, what a federal view of it would be. So there's a lot of decisions from a financial standpoint that have to be made around your day-to-day business and how do you make that happen. And then the third piece is, where do you invest strategically in technology? I think it's important that you look at how you can continue to use India as a solid base, and that includes looking at whether you need to have data centers here, whether you need to have strong, MPLS lines, whatever the case may be, white phone systems. I think we look at it that way. And then finally, for us, as we mature as an organization and get more clients, what are the types of things we can do to invest in to have the best and most optimum tax and financial strategy that ties into that. You don't want to make money and end up being in a disadvantaged tax situation as well. So I think it's those all critical challenges that we think about on a daily basis and have to deal with. In a broader context, we've talked about India needing $1 trillion roughly between 2012 and 2017 for infrastructure, and the need for investment and financial strategy to be very adept in India. And in that context, to some extent, if you look at the maturation of the asset classes in India, still typically there's limited opportunities for not just consumers but also companies for wanting to invest. It's basically equities or bonds, right, and real estate. Those are the three areas of financial strategy where you can look at investing and trying to make money. Well, if India wants to be a player in the market, we're going to have to look at opening up the risk a little bit. To some extent, this economic cycle has almost been a reverse backlash because India has felt like, by being conservative, they were able to avoid the last downturn. Well, that's not going to continue for too long, right? We cannot just participate in the market by being spectators and dipping our feet in the pool. At some point we have to jump in and open up the market with allowing things like credit default swaps and those types of instruments to come into the marketplace and open up that flow of funds to come in. There's only so much you can be able to do, and that's why you hear about the retail investment opening up in other areas as well. So I think you have to be cautious. So by no means am I saying RBI doesn't know what they're doing. They're a very, very smart, capable group of people that's looking for the long-term future of India. But I think it's going to be important for India to open up a little bit more and allow those types of things to happen, and let that type of initiative and instrument, let the financial markets kind of set their own pace to some extent. So that'll be interesting from a global context as well with what happens. So I don't want to monopolize a lot of time. I think we'll turn it over to the panelists, and then we'll hopefully have a good discussion about these things.